Welcome to BigONE Weekly News Update. I'm Mia. Crypto markets staged a modest rebound last week as improving macro conditions and easing geopolitical tensions reset risk sentiment. However, the rally comes at a pivotal moment, with liquidity expectations, ETF flows, and policy signals all converging into a wait-and-see phase ahead of major central bank decisions. Crypto rebounds across major assets. Over the past week, digital assets posted broad gains. Bitcoin rose around 3% to $65,700. Ethereum gained 1.7% to $1,725, while Solana and Hype outperformed with gains of 7% and 4.8% respectively. The rebound came alongside a broader risk-on shift in global markets, following stronger than expected US CPI data and the signing of a US-Iran peace agreement over the weekend. Macro markets reprice aggressively. Global financial markets quickly adjusted to the new macro backdrop. The US dollar posted its steepest weekly decline since early May, while the 30-year Treasury yield fell below 5%. Equities rallied in response. The Nasdaq rose 2.31% on the week, and the Russell 2000 reached a new all-time high. However, performance was uneven beneath the surface. While indices advanced, US software stocks extended a 9-day losing streak, falling more than 5% over the week. Additional idiosyncratic catalysts also emerged, including a strong IPO debut from SpaceX, which surged roughly 19% on its first trading day. Macro narrative shifts toward peak tightness. The first half of June was characterized by elevated volatility and pessimistic liquidity expectations. Markets faced overlapping pressures from geopolitical risk, strong labor data, inflation surprises, and liquidity absorption from large equity issuance. However, conditions may now be shifting. With many negative catalysts already priced in, the market appears to be approaching a turning point, potentially marking both a local peak in rate hike expectations and a trough in liquidity sentiment. Core inflation and wage data in the US continue to show cooling momentum, particularly in the services sector, where the post-2022 wage inflation spiral has eased. Labor supply and demand are gradually rebalancing, with little evidence that energy inflation is spilling into broader services pricing. As a result, expectations for additional Fed tightening may be overstated, while recent ECB and BOJ rate hikes appear more defensive than the start of sustained tightening cycles. Bitcoin weakness driven by ETF outflows. Bitcoin's recent correction has been largely attributed to ETF outflows and selective institutional profit-taking. Over the past month, US spot Bitcoin ETFs recorded net outflows on 17 trading days, totaling approximately $4.8 billion between mid-May and June 11th, the longest sustained outflow streak since launch. BlackRock's IBIT accounted for roughly 3/4 of the selling pressure, although flows began to stabilize later in the week. At the same time, Strategy briefly sold 32 BTC to fund dividend payments, sparking market concern. However, this was quickly offset by a 1,550 BTC purchase, funded via $181 million in equity issuance, reinforcing its long-term accumulation strategy. The market now closely watches two key variables: ETF demand recovery and signals from the June 17th FOMC meeting. Institutional adoption continues to expand. Despite short-term volatility, institutional integration of crypto continues to accelerate. Morgan Stanley partnered with Galaxy Digital to launch a conversion program, allowing qualified clients to transition BTC, ETH, and SOL holdings into regulated crypto ETP exposure without liquidating assets. This reduces onboarding friction by approximately 75% and significantly lowers entry thresholds, expanding institutional participation. Prediction markets enter a competitive phase. Competition in prediction markets is intensifying. Following its HIP-4 upgrade, Hyperliquid has entered direct competition with Polymarket and Kalshi. While Polymarket historically dominated crypto-native event markets, Kalshi has rapidly closed the gap in regulated event trading volumes. Hyperliquid's entry now creates a three-way competitive structure across regulated and crypto-native platforms. Regulatory momentum builds around crypto tax policy. US lawmakers are also accelerating discussions on crypto taxation. 7 proposed bills are currently under review, addressing topics such as de minimis tax exemptions, deferred taxation on staking and mining rewards, and expansion of wash sale rules to digital assets. While both parties agree on the need for regulatory clarity, Republicans are pushing for rapid implementation, while Democrats favor a more cautious approach. With the midterm election window narrowing, policy direction remains uncertain, but increasingly urgent. A critical macro week ahead. Markets now enter a decisive macro week. The Bank of Japan is expected to announce its rate decision, with markets already pricing in a potential tightening move. On Wednesday, the Federal Reserve will hold its June policy meeting, followed by a press conference from the new Fed chair, which will be closely watched for signals on the future policy path. Given high positioning and compressed expectations, these events could determine whether recent market stabilization extends or reverses. Conclusion. Crypto markets are stabilizing after a period of ETF-driven outflows and macro volatility, but the recovery remains fragile. The key drivers, ETF flows, central bank policy, and institutional adoption, are now tightly interlinked. While liquidity may be near a cyclical low, the coming week will be critical in determining whether markets transition into a sustained recovery phase or remain range-bound in a waiting and seeing environment. Join BigONE today and take advantage of the growing cryptocurrency market.